Good morning, Predicted Trades family. Hope everybody's doing well. Oh, what a big pump we had yesterday for CPI. Wanted to zoom out and get a shot on the year to go over this morning's prep. We've got about a month and a half left in the year. And just want to see what the year is giving us. So we hit new all-time highs back here at the very beginning of January, and then we have been selling off all year. We have a trend line from our highs that we rejected after that June rally up. And we started a sell-off with a new trend line from highs. And if we look, come on. Yesterday we broke through that trend line from highs. On that CPI pump, we got right through that trend line, and then we got a continuation, a gap and go yesterday. So we left behind a sizable gap. All right, pretty much could go like this and connect it to where we open. And there you go. There's our gap left behind. So, where can we go from here? Big key upside target right now is getting back to that trend line from the highs of the year, right? We just broke through our recent sell-off trend line from highs. So now it's a journey to get up to the highs, the trend line from highs of year. Right now that sits kind of near 4150, 4136.5. 4136.5, very key level. That was previous low of year, even after the Russian invasion. So kind of our low of year back in February and March. Obviously we went lower, but we defended this 4136.5 a lot before giving out in late March, April, something like that. So overall, that's the big upside target after we get a big breakout like this. Will there be pullbacks? Absolutely. At this point, we got above 39.22 yesterday. So now 3900, 39.22 needs to become our zone of support. If we look back, 39.22, we tried to hold it, got another little rally in September, but then we finally got back below it and rejected it. And when we rallied back, we rejected it and dumped on that FOMC. And now, a week later, we're right back above it. So, for today, and for the next couple of weeks, we want to hold that 39.22, 3900 zone of support. Our last ditch effort to hold is that 38.78. Kind of where this gap was left behind yesterday. So, could we get a pullback today? Could happen, very likely. We had a big push up on a Thursday and we kept going. Would not be surprised for them to bring it back a little bit on a Friday so that they can get next week's calls a little cheaper if they want to continue on this rally. And, we have plenty of reason to rally. Seasonally, end of the year, we get a rally a lot of the time that can be known as the Santa rally. We just got through elections and it looks like there's no crazy shakeups on the forecast there. And we just had CPI that confirmed that it's coming down a little bit. So we've gotten a number of metrics this month to say that for the month of October, inflation's coming down. Obviously, in December, we'll have to see what the numbers are for November, but for right now, we just had FOMC last week and CPI this week. So now we have a few weeks with no big economic data releases that could move the market. So we have a window here for the next couple of weeks to rally on up and try to test some of these previous levels and trend lines from highs. So just wanted to kind of give that high-level overview. Now let's dig down into today, and before I get too far ahead of myself, let's take a look at the economic calendar. We had our CPI yesterday and a bunch of Fed speakers. Today, it's Veterans Day. Happy Veterans Day. Thank you to any of you that may have served or any of your loved ones. Today we have a little bit more inflation data, that University of Michigan report that comes out at 10 a.m. That we get about once a month. So let's see if this data release also confirms that inflation's coming down. We could chop around for the first first 30 minutes, wedge for the first 30 minutes, and then once this data release comes out, it could send us higher for a continuation. It could also cause a pullback to that 3,900, 3,922, just for them to load up and run it up again. Next week, I'd say pretty light. Like I said, we have a couple of weeks where we don't have the big economic data releases that can move the market. So next week we just have some producer price index, PPI, some manufacturing index, some housing data, some retail sales, import prices, jobless claims, some more housing data, and more housing data. So next week, pretty light. We do have an OpEx week next week. What that means is once a month, the monthly options expirations expire, right? So next week, the 17th, are monthly option expirations. Always worth noting just because it can lead to an interesting week where we can see a lot of ups, downs. We can basically go sideways. But, you know, on strong momentum, we could also continue a grind higher. Excuse me, give me 1 second. So, digging into where can we go today? Let me load up our tool set. All right. So we are back above where we sold off from on FOMC. We are arriving at a daily and 2-day squeeze top. Luckily they are low compression, meaning they can be a little bit easier to get through, but they still provide some resistance. Meaning, as we try to head higher into them, we can push into them, have pullbacks, push into them, have pullbacks, while they get thinner and thinner. Right now, big key levels to the upside, 4,000, where we have this 39.96, kind of where we topped out pre-market overnight. We've got 4,020 and then 4,056. The daily 200 sits up around 4,082. And we have some key levels, you know, on our way up to that 41.36.5. Now, could we run in to some key levels like 4,000 and start a pullback to some of these key levels that we broke through yesterday? Absolutely. We want to keep that in mind as we are running into this daily and 2-day squeeze top. And as it is a Friday, they could have a decent little pullback to this range that we settled at midday between that 3,900 and 39.35. So be wary of that pullback today for them to load up into next week. But, the shorts are feeling the pain and they just keep pushing it higher. They could give us the tiniest of pullbacks and just keep pushing. So we've got our targets to the downside. Should we start to slip a little bit, we've got our targets to the upside, and we do have a little 30-minute squeeze that's starting to form on ES from overnight action going sideways. So definitely keep an eye on that going into close. A little 30-minute squeeze, likely going to be near our pre-market highs and lows. So let's see if that 30-minute squeeze tries to contain that price action for a little bit before we break higher or break down for a pullback. But I'll definitely be watching today's expirations and next week's to see, if we do get a pullback, are they starting to load up on certain strikes for next week on each name. On to NQ. Oh no, don't start going slow on me. So on NQ yesterday, CPI got above daily moving averages, had a tiny little pullback, did not even need to test those daily moving averages before heading higher to that 11,500, where it took a break midday. Then it finally took out at 11,500 where the daily 50 sat and went up to our next key level, 11,677. You can see we're trying to settle there before open. We have a daily Keltner, first daily Keltner to the upside, right there as well, providing support. So basically today, if we can hold that 11,600, it might be just small pullbacks to test and then keep going. If we start to lose that 11,600, likely pulling back to that 11,500 for a test and to settle before maybe pumping end of day as they load into next week's strikes. To the upside, if we can take out that pre-market high and that 11,800, it's all a goal to get to 12,000 big key psych level and 12,100 very big key level. That used to be good support in the past. So, got our targets to the upside and some targets to the downside. Also have a 30-minute squeeze just starting to form on NQ, so let's see if that provides a little bit of range before a push outside of this pre-market high and low. Ready. Come on. So ready yesterday from that daily 50 pre-market all the way up to the daily 200. Now sitting above it. So let's see if on any pullbacks we can hold that daily 200, which sits around 1875. If we can hold there, looking to get up and test 1900, 1910, where that second Keltner to the upside sits. 1900, big key psych level. Used to be support, even when we started taking out the previous low of year in March, April, 1900 provided tons of support. So that is the key target to the upside to get to. And just like the other indices, we have a 1-day and 2-day squeeze here. So we could see pushes in, pullbacks, pushes in, pullbacks until they start to fire. But ultimately on each index, if we do start to push through these daily squeezes, tops, and those daily squeezes start to fire, it's just going to add extra momentum into the end of year rally. YM. And I guess I forgot to cover on Ready, if we lose that daily 200, where it's trying to settle, likely, we're going to come back and test the same little range that we topped out, pulled back from yesterday. I'm not going to go back and look at it on Ready just because these charts are taking a little longer to load, but you get the idea. So, on YM, I feel like we had, on YM, we might have had a daily squeeze in the past that we got out of, and we're seeing that extra momentum. I was going to go back to show you, but again, these charts are loading slow, so I'm not trying to waste time. YM, arriving at our next key level, pre-market, this 34,000. Wow, coming from 32,500, almost at 34,000. Very simply, we got up to that 33,500 yesterday, pulled back from it, took it out, heading higher. Now we're arriving at the next key level, 34,000, big key psych level. So would not be surprised to hit that and start a pullback to retest, where they'll let it settle as they load up into next week. So be very aware of that scenario. If we can keep going to the upside, that third Keltner sits around 34,325. Third daily Keltner to the upside is when indices or any name is starting to get a little overbought. So, pretty much that is the upside target today if we just keep getting continuation. But kind of expecting us to reject this 34,000, 34,015, and slip back to retest these pre-market lows, this 33,500, maybe even as low as this, 350 if you look left. It's where we topped out on the week before moving higher yesterday, and when we broke through pre-market, you can see we came back to test that high a couple of times. So, little zone of support from 350 to 500, looking for that to hold today into next week to confirm the intent to try to go higher. Apple. So Apple made a lot of recovery pre-market and got back above recent highs, and the daily 8 held there and took off back to the daily 50 pretty much. And if market is going to do a big gap and then go for a 2 ATR day, they're going to have to be picking up Apple in that move. So, arriving back at our key levels here, the daily 50, would not be shocked for us to come up and test these a little bit and then have a pullback to this 144.5, 145. It's also where the daily 21 sits. It would be a great spot to pull it back to today to load up long into next week. After getting through resistance, confirming the intent to go higher, always be ready for a little pullback so they can take profit and reload to keep going. To the upside, targets are to get through these key levels on the way to 150, and then ultimately up to the next zone at 153.8, 154.7, where that daily 200 is about to arrive. We also have a daily squeeze top there at about 156. So those are the upside targets. And really want to see us hold 144.5, 145. If we start to lose that, the daily 8 is our last saving grace at about 142. But any lower than that, Apple is going to be showing us that it is still weak and wants to come back to settle again before trying to head higher. But that daily 21 right at our zone, very good spot if we have a pullback this morning to try to load long again. AMD. So AMD had a nice day yesterday, opened up kind of at the top of this range, took off through our key level and the daily 50 and just kept trucking up to that second Keltner to the upside now, pre-market. If we have a pullback today looking for 68, kind of near our pre-market lows to try to hold. If that gives out, coming back to this daily 50 at around 66.5, 65.5, the zone of support that we need to hold to keep going higher. Next key levels to the upside, 72.3, that third Keltner at 73.5, and then 75.25. Targets to the upside if we just keep going. Want to see it hold 68, or at the worst, this 66.5, 65.5. So if we do get a dip down there, look for longs off of that. Amazon. Printing up near 98. So Amazon, makes a big move pre-market and gets over a key level that it's been pinned under. You want to watch that first candle. It gave a dip to try to test that level, but it stopped at that pre-market candle and started to go back up. Once it crosses over that close and open from these two candles, that's your signal to go long. Amazon went from there at about 93 all the way up to 98 yesterday. Big old pump. And got above the next key level at 97. So, you already know I'm going to say, if we have a dip this morning, looking for that 96.5, 97 to hold, pre-market low and key level. If we can hold there, trying to continue the journey up to 100, 101, and 104. Kind of have a zone that I've created here from key levels. We have our daily 21 right at about that 102. So those are the targets to the upside if we keep going. If we start to lose that 96.5, 97, then could be coming back to 94, the daily 8 to settle. But on a nice pump up from pretty much third Keltner to first, let's see if she can continue the journey to get the full reversion to the mean at this 101, get back above 100, and start the journey higher. I talked about this yesterday, pre-market, how if CPI numbers are good, and we are going to see a pump in the market, we might start seeing things like tech wake up. We might see things like, we might see some of the big names in tech that have been getting beat up start to rotate back up to their daily 21s, get reversions to the mean, and then they can start to press higher. And some of the names that have been leading in this rally might take a break and pull back, have some profit taking. That's basically big money rotating out of the leaders that they were using to take the market up, like BA, CAT, you'll see those names, GS. Might be time for those names to take a break and for tech to get a rally. And on a lot of tech names, we saw great movement yesterday. So, let's see if Amazon can continue to the upside and get above that 100. Oh, come on, Toss. Don't freeze on me. There we go. BA. Man, still going. So BA been leading to the upside. You can see we got to this 169, 170. We settled, and then After CPI yesterday kept climbing higher. We are past third Keltner, and we arrived near this 180. You can see BA gapping down a little bit while the market is gapping up. So we might be seeing our first signs that BA is going to take a break while tech continues to rip. If it starts to give out 175, coming back to 170, 169. If it can keep going, obvious target to get to is that 190, 191. But a little overextended to the upside. Might be time to might be time to take a break and come back to key levels, daily moving averages, and get out of the way so tech can rip. Cat, same thing. Pushed higher still, but look at yesterday. CPI move up, hit squeeze tops, pulls back to key level. It does come back at the end of the day, but for the first hour or two, the market was moving up, cat moving down. So this 235 going to be key. We still have our 4-hour squeeze. Would not be surprised to see us reject 235, this 4-hour squeeze, and start a move back down to the bottom of this 4-hour squeeze for the daily 8 sits. Might be time for cat past third Keltner to take a break and have a little pullback. If it keeps going, obvious next target 240. Coin. So, coin, another one of those names that's been getting beat up, had earnings, been slipping down. Plus, we have all of this news lately with crypto, with Binance, with FTX. So, not surprised to see coin just kind of chilling. But we could start to see a recovery in a name like this, like I've been saying on the other tech names that have been beat up. We're at the bottom of a daily squeeze, so on coin today, let's see if we can hold above 50, and if we can start to push through 53. We're getting through this trend line from these highs that we've been pinned under. We could see a nice move up to our zone above 57, 58 and a half, with the goal of getting back to this 62 where that daily 21 sits. Not saying we get that full move today, but if we start to break out, we could see some momentum pick up. And, maybe by next week, we're getting back up to the daily 21, daily 50. So keep this on your radar. If it starts to get above 53 and can hold on any pullbacks, it's trying to show the signs that it's ready to break out and catch up to the market. Google. Oh, come on, Toss. Google made a nice move up, almost back to recent highs. Got back above the daily 21 yesterday, so on any pullbacks, looking for that 93, 93 and a half to hold. And if we can keep going, looking to get through it in 95, 96, in an effort to get up to this 99 where the daily 50 sits, and to this 100, 101. So we've got some key levels up here to the upside. Not necessarily saying that Google gets there today, but if it can get continuation, stay above the daily 21 today and into next week, looking to get up to that 100, daily 50. If it starts to give out that daily 21, likely coming back to test this zone at 91.5, 92. GS. Oh me, oh my, GS. Strong day yesterday, moving from 370 at open up to 380. Let's see how it deals with this 380. We are past third Keltner, so we could stuff at this 380 and start the journey back, 375, 370. If we keep going, next stop's 385, 390. But very extended past third Keltner. Might be time for, today and going into next week for names like this to take a break and for tech to continue higher. JPM, going to be the same thing. Getting up to 135. Next target's to the upside, 140. But extended past its third Keltner. If it starts to give out this 134, could start the process back to 130 where the daily 8 sits. In that daily 21, daily 200, sitting right at our 125. So we could see this name take a couple of day break, come back to something like the daily 21, daily 200 near 125, and start the journey back up for the rest of the year. Meta, God, up to 110. I think that means we got a full mean reversion on Meta. Yep, so we reverted to the mean at 110 yesterday. Basically made it from that 104 up to 112. A nice move yesterday with the market, but gapping down. While a lot of other names are gapping up, while market is gapping up. So it's still relative weakness in Meta. It doesn't have tons of reasons to keep rallying. It made it back to the mean. So Meta could likely settle in between this 110 and 105 and 101. These 3 daily moving averages, it could just start to come back and settle. Something to keep an eye on. If it can get back above that 10.5 and hold it, looking for it to complete the journey to this key level at 113.55. Past that next big key level, 123. We do have a daily Keltner at 117.5, kind of in the middle. So few targets to the upside if it can get continuation. If it starts to give out 108, then coming back to those daily moving averages looks more and more likely. Microsoft. Got back above that 232 yesterday and completed the journey up to 241 and above that daily 50. So on a pullback, looking for the daily 50 right at about 240, 241 key level, looking for those to hold on any pullback and to try to continue the journey back up to 250, 255 at the top of this daily squeeze. If we start to give out that 240, then it could be a slip back to 235, 232. Kind of where we opened the day yesterday. And near these recent highs where we topped out before FOMC. Netflix. So Netflix made it down to our key level at 252 and held it. And when it came back yesterday morning, held it pre-market and shot up to these daily moving averages. That's a good sign that we hold something key like 260. We can continue that journey up, getting to 275 yesterday, almost back to this daily 15, which sits at 280. So if we can hold above 275 today, we can continue that journey to 280. 285, 290. We sold off from FOMC at about 286. If we start to lose that 275, could be coming back to test that 270, 268, these daily moving averages that we got above yesterday. They could let it settle there as they load into next week's strikes to continue this journey back up to test 300 and 305. NVIDIA. Oh, NVIDIA. Man, look at that pre-market move. Gets up to key level, drifts back for a couple of days, and then CPI from 135 to 147, and then took off further. Starting to get up near third Keltner at this 160. If it can keep going to the upside at 165, 170, next big key targets. If it rejects this third Keltner, could come back to retest 155, 152, where we settled yesterday at that second Keltner. And so they can load up into next week. QQQ. So arriving back up at our next key target, 285. We're at the top of a daily squeeze. We could resist 285 today, slip back to 280. That daily 50 at 279. Find support there and then ramp back up. If we can keep going to the upside, 290, 292.5, where the 2-day squeeze sits. If we start to give out this 280, I mean, we're talking about coming back to 275, kind of where we started the day yesterday. But we do have where we sold off from FOMC at that 278. So 278, 79, 280 should provide support if we do get a dip today. Ooh, SPX. Come on. There we go. So on SPX, I always like to mark my gaps. I'm going to be leaving behind this sizable gap with our daily, excuse me. With our daily moving averages sitting in that gap. So, you're not going to have a little gap up today. On any gap, we should be having in mind a gap fill day, or at least a gap fill and then continuation type thing. So, obviously we got a gap and go yesterday, going to leave this gap behind. Today we're gapping up a little more. So be cognizant of the slip early to refill the gap, getting back to 39.56, 39.50. Could bounce there and continue the journey up to try to get to 39.76, that second Keltner, and 4,000, big key psych level at the top of this 2-day squeeze. If we start to lose that 39.50, we could be coming back to test 39.30, 3,900 at the worst, and for them to load into next week. We do have that FOMC high right under 3,900, so we do have a number of things that can provide support should we get down there to try to keep going. SPY. Come on, SPY, there we go. So we're arriving back above a very key level, 39.8. If we can continue today, it's obvious goal to get to, Let's start that again. Getting back above a key level, 395.8. Let's see if we can hold that on any pullbacks. That would mean we're very strong, very bullish, and we want to try to continue up to this big key cycle level of 400. We do have our pre-market low at about 194.5. So zone of support there. If we can hold that, continue to 400. If we start to lose that zone of support, likely coming back to retest where we bounced yesterday in this 388.5. So we could reject some pre-market high action, come back below and give out pre-market low, and start a little drop, settle midday, and then ramp back up. Just one scenario to definitely keep an eye on. Tesla. Oh, Tesla, Tesla, Tesla. So Tesla, first candle of the day yesterday, gave us a big dump right back to this key level. It also hit the outer shaded region on our beast tool. Perfect spot when it hits it early to reverse right back up. That's what we got. Held above that daily squeeze bottom, which is starting to disappear. On a pullback, want to see us kind of hold where we settled yesterday, retested, and started to get going. If we start to give out that 185, we'll call it, coming back to 180 for yet another retest and to settle before heading higher. We can hold above 185, get through 190 at 191, what was resistance yesterday. Looking for Tesla to continue up to try to get to 200 where the daily 8 sits. UVXY. Come on, 2 names left. There we go. So UVXY almost made it to 9 yesterday. Going to be opening near 9.5. So, kind of simple today. We got a little 30-minute squeeze. Use that as your gauge. If we can give out 9.3, the market can keep heading higher, and we want to see UVXY get down and fully test 9. But if we just keep bouncing at 9.3 and getting through 9.5 at the top of the squeeze, we could see UVXY pop up to try to get to 9.8, this daily 8 in Keltner, and we could see the market take a slip and settle for them to load into next week for continuation on the rally. So use that 30-minute squeeze as your gauge, 9.3, 9.5, the price levels to watch for a breakout above or a breakdown below. VIX. So, this is why we cover big key levels on VIX. Yesterday, with that CPI drop, fell from 26 right down to this 23.3. Slipped below it and 23 as we rallied yesterday, popped back up to 24, and then came to settle at 23. So, for continuation today, we want to see VIX stay below 24, stay below yesterday's highs. Get down below 23.3 and head down to maybe make it to our zone below at 22.5. That's if we get a strong continuation today. But if we do get that pullback and settle for them to load into next week, likely we'll see VIX get up to 24 for a test, struggle there, and then come back. If it gets above 24, coming back to 24.5. We did leave behind a big gap. So something to keep in mind. We might try to edge up and fill part of that gap, maybe halfway, and then just die late in the day as they load into next week if that's what they're going to do. So that's it for prep today. Hopefully this was helpful for everybody. We had a great free day yesterday. called out a ton of SPX strikes that settled anywhere from 30 cents to $1.50, and they all went up for, more than $10 pretty much. We saw a ton of 10x trades late in the day on SPX, all called out from our buy levels off of our tools. So, definitely come in for our free days, test out our tools, make some money with us. It covers your monthly fee when you sign up, right? And it was a pretty darn good success in the room yesterday. So, thanks for tuning in. Good luck today. It's Friday. Let's size down. Let's have fun. We should all be up pretty well on the week. If you're not, don't try to make everything up on a Friday. It usually doesn't work out well. Just size down, have some fun, take some light trades. And yeah, we'll see everybody in the room. Good luck today.